Hi, everyone, and Happy New Year. Darrell here from the WealthSpire investment team, and this is our first Markets in 2 Minutes update of 2025. So now that 2025 has officially arrived, we wanted to take this opportunity to look back on the past year across equity markets and provide a bit of a summary of where we've been, and then hopefully translate that into some takeaways that will help inform our expectations for this coming year. The first chart you see on your screen here is one that helps to break down the contributing factors to stock performance across different pockets of the equity market over the course of 2024. So basically what we're doing here is taking earnings growth and dividend income, adding those together to account for the fundamental growth of the market, and then anything on top of that is the change in price to earnings multiples. And the concept of multiple expansion or contraction is just a way of assessing how much prices are growing in relation to earnings. So if prices are growing faster than earnings, then you get multiple expansion, which essentially means you're now paying more for every dollar of profits that stocks you own are generating. And that concept is captured by the dark blue section of each of these bars. And it's an interesting story when you look across geographies and market caps. In large cap, we had solid earnings growth and a big increase in multiples. In small caps, we actually saw negative earnings growth in 2024, but multiples expanded there as well. And so we still saw positive performance at a price level. But then overseas, it was the opposite. We saw earnings grow at a reasonable clip, but valuation multiples actually contracted. A lot of that contraction occurred during the fourth quarter as international equities suffered some setbacks as a result of the increasing rhetoric around tariffs and economic protectionism. But moving forward into 2025, it'll be interesting to see if international markets can bounce back, given that that earnings picture is actually pretty solid right now. Because it does appear that some of the relative performance between US and international stocks has evened out a bit in recent years if you look under the hood and correct for the mega cap US names. Since the bottom of the market in 2022, the return of the average stock in the S&P 500 has actually been roughly equal to the average stock in the MSCI EFA index, which measures the returns across international developed markets. And that data is captured by looking at an equal weight index rather than a market cap weighted one. And so it continues to remain the case that those massive companies, the so-called Magnificent Seven, at the top of the US market, are making all the difference right now when you look at relative performance across those markets. If you were to go back and check out some of the older posts within this series, you'd find that we've talked a lot about this topic and laid out that the growth and profitability that these companies have produced helps to justify some of their outperformance. But this is something we're going to be actively watching as we move into 2025 because the disparity in valuations at this point is becoming wider and wider, and eventually something has to give. And because of that, it's likely we will revisit this topic in a couple months. But for now, I will just leave it at that, and we'll plan to bring you all another update in February. We'll see you all next time.